So good afternoon, everyone. Welcome to the post third day session. So today we'll discuss on economics, and I'm sure majority of you would be aware of economics long time in your 11th, 12th, or BCom or respective courses. You all would have been used to economics. You would be knowing all. So very simple fundamental question comes on economics in exam. If your base is clear of economics, then it will not be a challenge at all. So why economics is needed and why we have a topic of national income accounting. So just like any individual would like to know his income in advance, that how much I will earn in next year, so that I can plan my expenses properly. Similarly, government also need to figure out that how much I will earn next year from various activities and how much I could spend on various projects. But there is a small difference between individual and government, and the main difference is, if I plan something and I do not earn that much, I will not be able to spend because I have a limitation. I did not receive. But unlike individual, government can plan, and if that revenue sources have not received, government can still do expenditure as they have decided. Why? Can anybody tell me why it happens? What is the main difference between spending by government and by individual? Why is that so? Because government has very important thing with them. And what is that? Deficit financing. Or on a lighter note, I always say they have a printing press. They can print the notes, and I cannot do that. If I do that, I'll be behind bars. But government can always print the notes. They can always do a deficit financing. So government works on another way, that they will do whatever they want to do, budget, finance, expenses. If it falls short, they do deficit financing. So we try to find out approximately how much income government will earn, so that they can plan their budgets properly. But it does not mean that they will actually earn that. Let's say quick questions before we go into detail. We can answer this quickly, and these are all exam questions, very simple yet fundamental questions. What do you think would be the answer? So we have four options. So Rishabh has given one option, repo rate. Irfan, what is your view? Out of four, what do you prefer? Reverse repo. So we are following order: option A, then we come option B, reverse repo. C and D are still left. Now, whenever RBI lends to the bank for a short-term adjustment, liquidity facilities, it is a repo rate. So we will call it repo rate. So answer is repo rate. What is reverse repo then? Reverse repo is when bank lends to RBI. That is a reverse repo. So when banks have excess cash, they want to park in, it will be a reverse repo. What is bank rate? Any idea what is bank rate? So repo, we got a basic idea. Reverse repo also we got a basic idea. And what is bank rate?
I think the bank will lend to the customers. That is called bank rate.
That is called PLR, prime lending rate.
Okay.
Now I'll confuse you. The rate at which RBI lends to the bank is also known as a bank rate. Then what is the difference between the statement I said for repo rate and bank rate? So repo also, I told you, RBI lends to the bank under a liquidity adjustment. Absolutely right, Rishabh. So repo is when RBI lends to the bank for short-term purposes, Bank rates are the rates where again RBI lends to the bank, but generally for a commercial purpose and long-term purpose. Now comes an important question. Generally, which rate will be higher? Repo rate or bank rate? And why? Generally, when RBI lends to banks, which will be higher and why?
I think repo rate.
Okay, which loan will be higher? The one which has a collateral or the one which is unsecured at all? So which is unsecured out of these two? Repo is unsecured or the bank rate is unsecured? Unsecured. So bank rate is unsecured. So bank rate will be always higher than repo rate always. Why bank rate will be always higher? Because bank rate is unsecured loan, no collateral. Whereas in repo rate there is a collateral. Any idea what is that collateral? Why we say repo is a collateral? ऐसा नहीं कि RBI has no trust on the bank कि मेरा ही बैंक है. RBI do trust on the bank. But in repo, what is the name of repo? Full form of repo? If you think, you'll get a full form of repo. Repurchase obligation, or we call it repurchase option. So in repo rates, when RBI lends to the bank, it's not a plain lending. RBI says to the bank, okay, I'll give you 100 crores today. In return, you also give me a security of 100 crore treasury bills or unsecured or short-term instruments, so that in case of any default from your side, I will assume that you have sold your securities to me. So repo always have a collateral with them. Reverse repo, a bank rate do not have collaterals because it is for commercial purpose and it is an unsecured loan. CRR, we discussed last time, cash reserve ratio. Anyway, we all are aware now what is CRR? Or you want me to spend time on CRR, SLR? So CRR, as we understand, it's a cash reserve ratio. RBI puts a limit on all banks that, so what is the main objective of a bank, job of a bank, principal job of a bank? Accept deposits and do a lending. This is a fundamental job of a bank. Take deposits from public and also lend back to the public. That is the main fundamental deposit. So suppose a bank has taken 100 crore borrowings from public, 100 crore deposits from public. Can we give this 100 crore loan?
No.
Answer would be no, we cannot do that. For a simple reason, the RBI thinks that if I take all deposits of deposit holders and give to the public, give to the borrowers, in a rare scenario, if all people comes at same time and say, give my money back, then the bank will have no funding with them. And then what will happen? It will cause a collapse of the banking structure. So they put two limits, CRR and SLR. So CRR means, suppose today's CRR is 3%. All banks need to maintain 3% in current account of RBI. Suppose if I would have got 100 crores as a deposit from public, bank will not be able to distribute 3 crore. 3 crore will be blocked as a current account for a rainy day. That whenever any crisis comes, whenever a liquidity issue comes, public comes for asking money back, they can immediately pay. That is one leg, 3 crore. Then they put 18% SLR, that all banks need to maintain statutory liquid ratios. That is, all banks will have investments in treasury bill, gold bonds, or government securities, where they can immediately convert into a cash item, and immediately the bank can pay to the deposit holders if somebody comes. We call it as a run on the bank. And the reason why we have this, so now out of 100 crores, 18% will also not go, 18% will be in the investments. So out of 100, at least 21 crore will remain with the bank, and rest 79 crore will be distributed to the various public. in old times, when Manmohan Singh ji was finance minister, in old times, the CRR was 15%. So currently it is 3%. At that time it was 15%, and SLR was, any idea what would be SLR? Today it is 18%. In 1994, what could be the SLR? Approximately, any guess? Vague guess? How much you think is? It was 45% SLR in 1994. So total becomes 60. So 45 I need to keep in SLR, and 15% I need to keep in CRR. So a bank will take 100 crore deposits, 60 crore they need to keep in liquid funds with them, and only 40 crore they could do lending. But then it got liberalized and it has now reduced a lot. RBI do not pay any single penny interest on CRR deposits, and SLR bank is free to invest wherever they prefer. Now a simple question comes in exam. RBI increased CRR and SLR rates. What is the impact on the profitability of the bank? Upside, downside, no impact. What do you think? Any thoughts on this? What do you think would be the impact? It will be always downside, because the net interest margin will be reduced, because you'll not be able to lend more. So, and I need to pay deposit interest. So if I bought 100 crore deposit at 6% interest rate, I need to pay the deposit holder 6% mandatory. I cannot say, because I am not able to lend more, so I will give you less interest. So once I have committed an interest, I need to pay that interest. So the bank will be not be able to fund more money. And if you would have read yesterday's newspaper, you would have got this idea. The policy repo rate is generally dash the reverse repo rate. What do you think would be? Any thoughts on this? What do you think it could be? So repo rates are always higher than the reverse repo rate, always. Yesterday, if you see that announcement made by our RBI governor, that now our repo rate is 4% and reverse repo rate is 3.35%. Generally, there is a difference gap of 0.25% to 0.75%. That's the range you will always find between repo rate and reverse repo rate. And because since repo is RBI lending to the bank, so RBI will always charge generally higher to the banks. And in terms of giving back, RBI will always pay less. Generally, reverse repo rate always higher. In exam, you get such a simple questions also. And a lot of people get in panic mode, give wrong answers to exam. Quickly answer to this. What do you think?
Banking companies.
So in exam, a lot of people choose Reserve Bank of India under pressure. So we don't have Reserve Bank of India. It is 1934 for Reserve Bank. Here it is 9 banking companies only. Now, whatever you understand by disposable income, what do you think fits best among 4? I have not explained what is disposable income, but just first we understand basic understanding. What do you think it could be? Now in exam, a similar question comes on this similar topic, that from if we add savings and spendings, what we will get, disposable income or personal income. So if my concept is clear, I can easily answer this. If I add savings and spendings, what should I get? Personal income or disposable income? So the name itself suggests disposable. What does it mean? So what does it mean? Disposable means? So the answer is the personal income. Answer is A in this. What do we mean by disposable income? It means the income which is received by individual after he has completed his statutory obligation. So paying tax is not a choice, it's a compulsion. After paying my taxes, whatever is left in my pocket, I am allowed to either spend wherever I want or save. So either I can buy a flat, buy a car, I can do a spending, or I can invest in shares, I can invest in bank account, I can do a save. So similarly, savings and spending will always give you a disposable income. Personal income, disposable income plus taxes will give you a country's personal income. So when we say personal income, does not only mean individual income, it means a person income. So a company is also a person. If we take because we are looking in the context of national income of India. So here company is also a person. So it means the first is answer. This answer we discussed last time. The maximum contribution to GDP is always by service sector now. Earlier it used to be agriculture. Since 2000 onwards, it is service sector. Now, if we see last statistics, 54% was more than 54% is coming from service sector. Then we go manufacturing and then agriculture. Which of the following you think is not a tool of a fiscal policy?
Public debt. D.
If you read the question again, you will get the right answer. Read the options again, sorry. If you read the options again, you will get the right answer. So D is not a right answer.
Okay. Government expenditure.
GDP is not a tool. GDP is the end product, gross domestic product. You don't use GDP as a tool. GDP is the ultimate result of what happens. So if government need to do something, to do some inflation control or deflation or recession control, what government will do? They will increase the government expenditure. Suppose there is too much of crisis in India and the public needs a lot of money. So after COVID situation, what government will do? Government will start doing public expenditures. So they will start making highways, roads, dams, bridges, so that the poor people will get some work into it. So that is government expenditure. If the government needs some money, they will increase taxes. If I am having a lot of inflation, what I will do? I'll increase taxes. And if the government cannot print their own money for whatever reason, they will take public debts. So they will do borrowings from world other countries and take it. Ultimate objective is to get the economic control in Indian society. So GDP is the ultimate end result. It is not a tool. If you logically think this question, you will always get a right answer. You cannot even, nobody need to explain this. You can just think logically and get the right answer. So what happens if I decrease taxes? What will happen? Instead of controlling the inflation, it will be increased more, because the lower the taxes you keep, the more money supply will come in the hands of public and the more spending they will do. So my demand will never be curtailed. So demand will be increased and supply will not match accordingly. So inflation will further increase. If we decrease borrowing rates, unnecessary borrowing will start. So suppose if tomorrow the government says, if anybody wants to buy a house loan, we will give you 5% interest. Even if you have two buildings, two flats with you, you will still buy another flat thinking that if I put in FD, I get 5%. Why don't I take money and make another property? So the more the government decreases borrowing rate, unnecessary lending will start and people will take borrowings. And again, the demand will not curtail. The moment government increases borrowing rates, then actually the inflation will control, because then the supply of money will be limited. Nobody will have excess liquidity, and then people will only borrow when it is actually necessary. So I'm sure you would be aware of the phenomena when real estate prices are increasing because there are so many investors who are coming in, and the real users are not buying the properties because investors are buying for the period of holding and selling it back. So the prices are increasing very high. But the moment actual users started coming in real estate industry, the prices become stagnant. Because if I bought a property, it is only for my personal use, I will keep it limited. So that's why increasing borrowing rate will always be able to control. If you increase again government spending, again the money will go into the hands of public more. So inflation cannot be controlled. Very simple question comes in exam, but a lot of people get confused in exam and choose a little bit different options. So there are two policies which every government focuses: fiscal policy and monetary policy. Fiscal policy is always administered by Ministry of Finance, and monetary policy is always administered by RBI. So RBI manages the monetary policy and fiscal policy by Ministry of Finance. So it is RBI. Now we'll understand the basic concepts. So as we discuss what is national income accounting, that is, a country should know how much total income I'll earn during the year, or how much value of goods added, services added during the whole year, so that I know what is my benchmark. Now there are two concepts: gross domestic product and gross national product. We call it as a GDP or GNP. GDP primarily means, the definition of GDP starts with, it is the sum value of final goods and services produced during a particular year in a country, in any territory. So if I'm talking of India GDP, it means that in India, how much in a whole year, how much goods and services I have produced during the year. So that shows my gross domestic product. GNP means similar to that. It means GDP plus net factor income from abroad. So GDP only consider whatever you earn in India, and GNP includes India plus net factor income from abroad. So when we talk of GDP, it means that, suppose assume that in India we have two companies only. One is Indian company and one is Japanese company. So suppose Indian company produced 50 crore rupees worth goods and Japanese company produced 20 crore worth goods. And we know that whatever Japanese companies have produced, they will again take that money out to their country. Still, we will say our GDP of the country is 70 crore rupees. Even though it is owned by Japanese, not by Indian nationals, but since the production happened in our territory, production happened in my territory, so I will always use the concept of GDP, saying that in 1 year in my geographical boundary, how much I have produced, final goods and services produced, that will be known as my GDP. Now, one hypothetical example assume. So in India, we have two companies, one C8 Limited, which makes tires, and one we have Maruti, who make cars. So C8 Limited produced 2 crore rupees tires in whole year, and hypothetically 100% it was consumed by Maruti. Maruti bought all the tires for their cars And then Maruti says, during the whole year, we produce cars worth of 10 crore rupees. Now, what should be my India GDP? 10 crores or 12 crores? What do you think? So when I'm disclosing my GDP to world, what should I say? We are 10 crore GDP or 12 crore GDP? So if I say it is 12 crore, then it looks you are double counting, because this 10 crore already include the 2 crore tires. That cost is already captured. And that is the reason the definition of GDP says some value of final goods and services produced. So though a tire for a C8 company is a final goods, but it is not final goods for a consumer. For a consumer, car is a final goods. If suppose in this example, out of 2 crores, 1.5 crore is always used by Maruti, and 50 lakhs is bought by general public. So I would have bought a car 5 years back, and now my tires got rusted out. So I want to buy a new tire. So I directly go to the C8 and buy a tire 50 lakhs from them. Then my GDP would be 10.5 lakh, 50 lakhs, because then that is actual goods and services used by me. This is not coming under duplicacy. So that concept we need to understand. Now, suppose I sold my Maruti, which I bought 5 years back in this year. Will that selling of Maruti, resale of Maruti will be considered under GDP? Like I got into cardeko.com or cars24 or any website. Will that transaction will be considered under GDP? Yes, no, maybe. Any thoughts on this? It will not be considered. Why it will not be considered? The sale price, because it is not goods and services produced during that year. So I have not produced that. What will be included in GDP? Suppose I would have gone to Cardeko or any online car platform and said, if you sell my car, I will give you 5% commission. So whatever the commission earned by that company, Cardeko or whatever website, that commission income will be included in GDP, because that is the services given or produced during that year. But the sale of old car will not be considered in GDP, because that has not been produced during the year. Now, any transaction on stock exchange. So suppose I have a Maruti shares and I'm buying, selling Maruti shares during a year. Will that sale purchase of Maruti shares will be part of GDP? So selling of shares will not be a part of GDP. Though the commission earned by NSE, BSC, that commission income will be a part of GDP, because that's the services they are producing. But if I'm selling n number of shares, that selling of shares will not be a part of GDP. Any underground transactions, illegal transactions will not be part of GDP. Suppose we have a women help group. So there is a group of women who make papads, pickles, chutneys, or household products, and they are selling without forming any association or without making any corporate entity, or the public do not get data. So neither they do file GST returns or neither they have any income tax declaration. So if that information is not available, that will not be counted under GDP. Now, how practically GDP is computed? So there is a Central Survey Statistical Organization, CSSO. It's a government organization that have more than 1,000 employees, that is research analyst. And so they do a calculation of GDP based on 8 industries. So there are eight data collector points. So they collect data from 8 centers, and that data is used in computing GDP. Practically, GDP is not as simple as it sounds. Informal income will not be in GDP, because for a simple reason, they don't have a data. And why they don't have a data? Because when the government collects the data, they have a center point. So I'll give you examples how data collected. So one data they will collect from, let's say, agriculture mandis. So all Anaj mandis, they have one central repository. So so suppose Rajasthan Anaj Mandi will tell to the Central Warehousing Corporation that this year we produced 100 quintals of wheat. So each state will tell 100 quintals of wheat and they will give a data to them. Then they will say also, now out of this 100 quintal of wheat, 40%, and it's a ballpark figures always, it is not exact sacrosanct one-to-one numbers. They will say out of 100 crore wheat, 40 crore will go into human consumption directly because people will eat for their human consumption. 30% will go into liquor manufacturing companies because liquor companies take wheat as a prime ingredient, so that will go into that. Or 30% will go to pharma companies or any other companies who make wheat consumptions. Or for example, Ashirvad Atta Chakki or any other companies who grind the wheat and make attas. So what will happen? One data they will take from retailers, agriculture, total mandi that 100 quintal wheat used. Now, liquor company has also bought that wheat. They will also use it under their raw material. So to avoid double counting, they start segregating from the grassroots level as much as granular information they take. Then they will go to the Chamber of Commerces. They will go to MSME sector. They will go to Export-Import department from the government where data comes in, that how much it is imported, how much is exported. So they get a ballpark figure. Then they do some adjustments based on clarity of data, sanity of data. And then they publish GDP every quarter, every year, that how much is my GDP coming in, how much growth we are getting in. And any legal transaction or illegal transaction which has not been reported will not be came into GDP. So just like give an example of some women are making cookies, biscuits, achar, papad, but they are not selling publicly in terms of not selling under some entity. They are just doing household in either on certain exhibitions and all. So that number does not come into the GDP properly. Now, GDP talks about goods and services produced in India, and GNP talks about goods and services produced in India plus net factor income from abroad. So suppose we have so many Indian diaspora who is in Middle East or Africa or various parts of the world, and they are sending money to India. Now, which will be generally higher? GDP will be generally higher or GNP will be generally higher? Generally. Based on definition perspective, generally what will be higher? Generally, GNP will be always higher, generally. In your debates, newspaper discussions, you heard of GDP more or GNP more? Whenever any discussions happen, have you heard GNP or GDP? Always by default, people discuss GDP. I would not have seen any debate where people say, let us discuss on GNP. Nobody bothers on GNP. Any reason why people don't bother on GNP when it is a bigger number? Still, they focus on GDP always. Any particular reason? Why you think GDP is the only benchmark? Any thoughts? Why we are not focused on the bigger number and we are focused always on GDP, always? Depicts growth in nation. So GDP becomes the first benchmark to compare apples to apples. So India can be compared with another country only by its GDP. If I consume GNP, then I will not be able to compare my country's growth with other country because I have an additional element involved on which I have no clue. Why no clue on net factor income from abroad and why GDP is relevant? GDP tells me how much I have produced in a country using the country resources. So if I am producing in India, I am using India resources. So I'm able to tell how much my country resources can be utilized in a year to produce that much of output. So it shows my efficiency and it shows my growth potential. In GNP, I will never be able to find out to get net factor income from abroad how much resources I have been consuming or my countrymen has been consuming. So suppose, let's say Jaikanji was in out of India at some time. So whatever income he would be earning, not 100% income he will be sending to India. Some income would be spent there by paying rentals, electricity, food. So if I am earning a crore rupees a year, I'll be sending India only 60 lakh rupees. But the government will not know whether the 40 lakhs I'm spending or saving or whatever I'm doing. So, and I cannot find out for earning those 1 crore or 60 lakhs, how much machinery that country is spending on my population. So that is a very absurd figure to look into discussion. So there is always you find GDP, and there are four factors of production. Any idea what are those four factors of production? We call it, so that we call it four factors of production known as land, labor, capital, and entrepreneur. So without these four factors, you cannot run into any business. And I'll explain more in detail what these four factors are. Per capita income. What do we mean by per capita income? So per capita income is computed by total GDP of the year of a country divided by total population of that country. Now this definition has a flaw, which is worldwide flaw, and that flaw is when we count total population, we count from a child of day one to a senior citizen of 120-year also. So if somebody is 100-year-old citizen, he will also be counted in per capita income. If somebody is a one-day child, he will be also counted in population. Even though somebody can always argue he may not be able to earn. So one-day child cannot earn, and nor 100-year-old child, 100-year-old gentleman can earn anything. Still, why we count them in per capita income? Because they are still consuming the resources of India. So whether be a one-year child, one-day child, or 100-year gentleman, they are still either consuming food or whatever it may be. So total population means total population, not above 18 plus or earning population. So per capita income is a benchmark to find out how much your country level of development and growth. The higher the per capita income, more prosperous. There is one country where you are allowed to enter only if you have a $10 million bank balance. That is Monaco. There is one country in Monaco, in somewhere in Europe, because they say we are one of the richest countries. Monaco is having one of the highest per capita income. They say we don't want people to just random people to come. So if tomorrow you have a lot of money with you, but you want to just travel Monaco, they will not allow if you don't have a $10 million bank balance in your bank statement. So because each country say we are the richest country. So like Middle East and Monaco or some European countries have a lot of wealth. India per capita income is not that great because of 2-3 reasons. One, our population is too high as compared to the resources, the consumption, and the production we are doing. China is growing faster because everyone is producing too high and they're controlling the number of populations. Now, personal income and disposable income. Personal income means, so I have told you four factors of production: land, labor, capital, entrepreneur. When a business takes land, he will give in return rentals. When a business taken labor, he will give in return wages. When a business is taken capital, he will return interest. And when he's taking entrepreneur from household, they are giving them profit. After that, whenever we give these to public, they will pay taxes. And after paying taxes, it becomes a disposable income. Once it is disposable income, they will decide either they want to spend, save, or whatever they like to do. It is their choice. They can do that. Based on their decision, the growth happens. If everybody keeps the money and do not spend in public, let's say we all earn and do not buy any new car, do not buy any new vehicle, so the automobile industry will go for a toss. It will impact the growth sector. So saving is also not always advisable. People should spend also, then only the cycle will continue. And it's a vicious circle. If you spend, money goes to the entrepreneur. That money he pays back to the society in the form of land, labor, wages, rent, etc. The moment you stop spending, the moment he will not get cash flows and the cycle stops. I'll explain the cycle shortly. Now there are two concepts, nominal income and real income. What do we mean by nominal income and real income? Nominal income means, suppose my last year's salary was 10 lakh rupees. And my boss says, this year I'll make your salary 11 lakh rupees. So this is my nominal income. Last year it was 10 lakh rupees. This time he made it 11 lakh rupees. But suppose this last year 10 lakh, inflation was 7%. So ideally 10 lakh 70,000 is by default my salary should be, because due to inflation factor. Now if he's making 11 lakhs, I'm just getting a growth of 30,000 only. So I cannot say my real income is 11 lakh. My real income will be excluding inflation part. Now there are two important policies which every government focuses: fiscal policy and monetary policy. Fiscal policy is concerned with Ministry of Finance, and they are concerned with the concept that we should ensure that there should be the lowest unemployment rate in India, in any country, because the lowest unemployment gives the assurance that public are deployed, people are working, nation has no chaos. Because if there is too much of unemployment, what will happen? Social unrest will happen. So every government eradicating unemployment. Second, the government job is to ensure the country is growing on a controlled manner. The inflation should not be on a sporadic manner, or it should not be unorganic growth. The country should grow organically. The recession, if it comes in, the government should chip in. And if there is too much of inflation, then again the government enter in to control the policy. So fiscal policy ensures that everybody should have money properly. They should be able to eat. There should be no poverty. That kind of concepts government starts. Monetary policy works in ease of availability of money. The public should get money whenever they desire. Every monetary policy should work in line with fiscal policy. What will happen if monetary policy does not work in line with fiscal policy? Any thoughts? What will happen? So RBI needs to make policies which are favoring the fiscal policies produced by Ministry of Finance. Suppose government says Make in India campaign. So suppose central government says that we should follow Made in India campaign. All youth should become entrepreneurs. They should take loan and start their own factories instead of doing BPO jobs. Why should you do a BPO job for a foreign country? Start your own factories, let's say. Now, if I go to RBI and say, any bank, and say, give me loan because I want to start my own business, as idea given by our finance Ministry of Finance and Modi ji, and then the bank says, we will give a loan to you only and only if you prove that you have enough capital to repay the loan. That means you have sufficient collateral to pay, or you have 5 years of profitable working experience, so you're not a fresher. Then do you think I'll be able to get a loan? Then the government objective of Make in India will succeed? Probably no. Because the first condition is I should have a profitable track record. That means you're not allowing first timers. And you're asking me to give 100% collateral. Then also I cannot take that. Then the government, then the fiscal policy will crash. So what will happen if, generally you think, what is the first thing happens when monetary policy does not follow fiscal policy? They take a separate line. Any idea what generally happens? Practically, that always happens. Any thoughts you'd like to have on this? What generally happens when monetary policy is not getting in line with fiscal policy? Very important thing happens then. And the important thing that happens is, then at that point of time, the RBI governor changes, not voluntary, forcefully. So wherever that you're not talking in the tone of fiscal policy, government chips in, enters in, and they remove the RBI governor. Because why the government removes the RBI governor? Because government knows if our fiscal policy fails, we will not be able to come to the power next time. And no government is sitting here for charity. Every government is sitting here to come back again, be it any government. And the economic theory says the sitting government should focus on such projects so that they can come back to power again. And why the economic says that the running government should come again, and what is their logic behind saying this? So they say that if the sitting government does not come again in the power, what will happen? The new government who will come, they will stop the projects of old government. They will start their new projects. So it will cause a damage to the country. Whatever funds you have spent it earlier, that will be stopped. So that will be a challenge. Now there are two processes, two theories: expansionary approach and contractionary approach. Expansionary approach means whenever there is any fiscal or monetary policy deficit, you spend a lot, you expand. So government start expanding, government start making, announcing new projects so that people will, money comes to the kitty of the government, and that way it will help the government to revive economy again. So that is one approach. Second approach starts with contractionary, where the government take decisions either to increase the taxes, that is control, or to reduce the spending. So suppose we have a Manrega scheme where you, even if you do not work, government will give you, let's say, 300 rupees per day. That's a policy to support the poor and people below the poverty line. Now, suppose in the choice between increasing taxes and reducing subsidies, which choice government will prefer generally? What do you think? The government needs to take a call. I should increase taxes or reduce subsidy or remove benefits. What they should take first? What do you think? Logically, what do you think? Both have an impact of controlling the inflation. But what do you think the government will do generally? They will always go for increasing the taxes, because the moment they reduce the subsidy, they will get a huge repercussion in the vote bank. Because whenever you take something from someone, they will always think that you are stealing it from me. And when you increase taxes, what will happen? Tomorrow the government increase tax from 25% to 30% on companies. What will happen? 10 days we'll make a noise on Twitter, Facebook, social media, and then we'll be silent. But the moment government reduces the subsidy of any public, especially poor class people, they reduce the subsidy, what will happen? They will ensure that the next time when the election happens, they will give you a reply with that. And then no government would like to take such kind of risk. That's why they try to avoid. Now we discuss repo, reverse repo. Why repo, reverse repo is there? Repo, reverse repo concept we understood. CRR, SLR we discussed. CRR is cash reserve ratio and SLR for banking terms. What is OMO? Nowhere related to OYO. Any idea what is OMO? Open market operations. So whenever a stock market crashes, which company comes and gives support to the stock market? I'm sure you all would have read this, that whenever stock market crashes, next day one company enters and start buying in the market, start again buying, so that market again stabilizes. Generally, LICs and public institutions come in to support the market. So similarly, just like in stock market, some people come in economy, there is a concept of open market operations, which means that whenever there is too much of liquidity in economy, so suppose there is too much of money with everyone, government need to squeeze that liquidity. So what they will do to squeeze that liquidity? They will announce, now government is introducing 9% tax-free RBI bonds for lock-in period of 3 years. With this, what will happen? A lot of people will start investing in RBI bonds for two reasons. One, it is tax-free. Second, it is a secured investment. So there, the liquidity will be controlled. Liquidity will be squeezed. Suppose the other way happens now, that we do not have there is too much of recession in the country, too much of recession. And which actually happened in COVID period. So what was the biggest challenge happened in COVID period? How all NBFC functions? What does NBFC do? NBFC give loan to public, and then they expect public to repay the EMIs. Based on those EMIs received, they again give back loan to new people. So the cycle continues by you give loan, you get EMI back, and issue fresh loan. We all understand what happened in COVID period. The EMI stopped coming back because RBI has given a moratorium for 6 months that, okay, if you do not pay EMI for 6 months, that is fine. So for 6 months, EMI was not coming. Now you can imagine for a bank, NBFC, when there is no EMI coming in, how can they do for the business? So the lending was stopped. Then they all went to Ministry of Finance and they tried that this is actual problem. What should we do? So then Ministry of Finance say, now we will help you by open market operations. So what they did, so ministry said to all banks that these NBFCs, all NBFCs in India, whenever they need money, they will introduce a bond. So they will issue a bond. All banks have to mandatory subscribe to the bonds. So if that is the reason, if you see last year, so many NBFCs issued listed bonds, debt, they issued debts, and all debts have been subscribed by all the banks. So with this, the money now came into the system. So this is an open market operations. Last is helicopter money. So what do you mean by helicopter money? The name itself suggests somebody throwing money from the helicopter. In economic parlance, it means that when there is too much of recession, government starts printing money and distributing to the public randomly. So if too much of money, too much of poverty, government will print so much of money and give to public. It has never happened in India, but there is a concept in economics, and in US they say that whenever we'll face with trouble, we'll just throw the money from the air. This concept comes from US. They will say we'll drop the money from the helicopter. Whoever gets money will start spending. Practically nobody does this, but this question come in exam that what do you mean the helicopter money? So when RBI prints the money and gives to the public freely, that is the helicopter money. What is business cycle? So we all know there is a cycle. A cycle starts with expansion. You expand, then it goes into the peak. You are on the top. You are selling your demand and supply. Your demand is huge, so you're on the peak. Then it comes contraction, where your demand started getting squeezed. The supply is full, but demand is reducing. So you are into a contraction phase. And when this continues regularly, then it is then you comes under the trough. That is the lowest point of your cycle. So we start with expansion and goes to the trough. So in exam, a simple question came: at which business cycle hiring of labor will be maximum? Sort of 4 business cycle, which cycle you think hiring of labor will be maximum? It will be in expansion, in peak, in contraction, or trough. So it is always expansion, not peak. A lot of people get confused in exam. They put answer peak, that in peak, the hiring will be more. In peak, your revenue will be more, your sales will be more. But in expansion, the hiring will be more in expansion, not in peak. Now, when do we announce that GDP, that we are getting a recession in Indian GDP, Indian economy? When the government announces that the recession is hitting India. So there is a benchmark, and that benchmark is whenever for continuous 2 quarters, the GDP is showing negative growth. For continuous 2 quarters, it is negative. Then only the government announces that we are going into a recession. Then the government start taking action. Then the government starts whatever best possible to improve the GDP for the next quarter. So 2 quarters are important, not 1 quarter and 1 quarter up, 1 quarter down. So 2 is mandatory. So an exam question may come that the recession is considered on what benchmark. So that is continuous 2 quarters GDP is negative, then it is. Now, impact on valuation. What is the impact on valuations? Now, why GDP is relevant for valuations? So, in GDP, in valuations, the most important concept is DCF. If we are doing highest valuations, so in DCF we got the majority of. In DCF we get the majority of valuations. And in DCF, if anybody would have worked on DCF, he will agree the highest value comes from terminal value. So you first calculate 5 years cash flow generally, and then you take a terminal value. The 5 years cash flow will give you somewhere around 20 to 30% total value. Remaining 70% will come from your terminal value. To calculate terminal value, what is the most important point? What is the most important point to calculate terminal? Is the growth rate. What growth rate you assume that the business will go in future? What is the general growth rate we take? Any logics? What is the general growth rate we take? 5%, 6%. Now, there's a thumb rule that our growth rate cannot exceed India's GDP. Whatever country GDP, that generally cannot be exceeded. So we generally take between 2 to 5% generally. 7% will be little bit more aggressive, because if you are touching just GDP, so somebody can question that, is your scale of business too big that you are having too big industry? So there is no scientific rule of choosing a number 5 to 7 or any number, but the benchmark we use is that I should be below my country's GDP always. So first we look into the country's GDP, then we look into the industry which we are valuing. So suppose if I want to value Dish TV now, so if Dish TV we value, can the company says we will grow at 7% or 5% growth regularly? Difficult to justify 5% growth of a Dish TV. Why difficult to justify Dish TV? Because now everybody would be taking this Netflix, Amazon, or OTT platform subscriptions. The incoming youth, the new generation, do you think they will take set-top boxes or they will take this online platform subscription? Mostly will take online platform subscription. Now, so can the company says I will grow with a 5% rate? Very difficult. Until unless they change the business model. So then I cannot say my country will grow, my valuation will grow at 5%. Then I need to look which my industry is into which side. Is it an expansion, peak, contraction, trough? So if you ask me, like, take example of this industry, set-top box, they are into a trough. They are on the lowest phase now. Unlike the reinvent, just like Tata Sky did recently. If you've seen the Tata Sky ad, they become now Tata Play. Now they are going to give a subscription of platform also and distribute also in their subscription. How successful it would be, they don't know, but they realize how people are not taking their subscriptions. So they need to change their model. So you need to see where you are getting into, which cycle you are. Now we'll understand very basic concepts. In exam, what is the difference between our understanding and the understanding of normal accounts and understanding of economics? So simple question comes on, what is revenue receipt and what is capital receipt? In economics, the revenue receipt means, and when we are talking economics, it is always from the government's perspective. It is not for an individual perspective. It means that whenever a government receives any money which neither creates liability nor reduces asset, it is known as revenue receipt. So I'll give you an example. In exam, a question comes like this. India received 100 crore funding from World Bank to give the COVID vaccines. Is it a revenue receipt or a capital receipt? What do you think it could be? So World Bank said, I will give you 100 crore rupees, just you put free vaccines to all people. In return, they're not asking you to revert it back, pay it back to me. There's neither on interest, neither on any repayment they ask. It is a grant. They say we are giving you a charity that you give free vaccines to public people, free people. Poor people you give free from our side. then it will be a revenue receipt, because they are giving to me, but neither they are asking me to pay it back. So I am not having a liability, nor they are asking me to give your any of the shares of any country, any company. So nor my assets are reduced. Tomorrow they say, no, I will give you this only if you give me shares of a BSNL or any government organization, then my assets are getting reduced. So it is not happening. Capital receipt would be when they're giving me either on interest or even zero interest and say, you pay me after 5 years, 10 years, 15 years, and that's a capital receipt. So here it is a revenue receipt where you don't need to pay it back. So all grants, donations will be a revenue receipt. Similarly, what is revenue expenditure and capital expenditure? Whenever you do any expenditure and it does not create any asset. So for example, government has given free vaccines to public. So it is not a capital expenditure because no asset is getting created. Government is giving Manrega subsidy that even if you're not working, I'll give you 500 rupees per day, let's say. That is a revenue expenditure. But wherever government does anything which is either you're creating an asset or you're reducing a liability, that becomes a capital expenditure for you. Now, what are the deficits? When the expenses exceed revenue, that's a government deficit. So government plans expenses and revenue. If expenses exceeding revenue, that is a government deficit. And as I discussed earlier, that government can always do whatever they want to do. Even if their budget is not matching, they can always do expenses because they know they can always do a deficit financing. Revenue deficit is little bit different from normal deficit, what we understand. Revenue deficit means when my income falls short of budgeted income. So if the government has projected that I would be earning X amount and I'm not earning that X amount as per planned and my actual income would be 100. Let's say the government budgeted that from GST collection, I will get 120 crore rupees. Actual collection was only 100 crore rupees. Though there is no actual loss, but it is a revenue deficit for them because of budgeted loss for them. Fiscal deficit is when the government total expenditure exceeds revenue, excluding money from borrowings. That is a fiscal deficit. A simple question comes in exam on relationship between primary deficit and fiscal deficit. So primary deficit is fiscal deficit minus interest payments. Whatever interest I'm paying on borrowings, if I remove that, that is a primary deficit. So why we compute national income, how we compute? By GNP or GDP, GDP and NDP. What is the difference between gross domestic product and net domestic product? What should I reduce from gross to get net? Any thoughts? If I need to get net domestic product, what should I reduce from gross? And which is standard in all economic concepts and all financial accounting concepts. To get from net from gross, I should reduce depreciation. So in exam, they ask a equation also, GDP minus what will give you NDP. So it is always NDP, depreciation. Per capita personal income will be discussed. Explain the circular flow method. What we do not include, so we do not include. So this is a circular flow for economics, basic economics. Just I'll try to give you a small explanation on this. So there are two concepts, business. Let me take annotation. There are two concepts. One is business and one is households. What does household gives to business? Household gives them land, labor, capital, entrepreneurial activity. These things we give to business. Then only business is able to make a final consumer goods. By taking all these services, labor, land, capital, entrepreneur, business pays them household back. How does business pay back? Business will give them wages for labor, rent for land, interest for capital taken, and profit for entrepreneurial activity. So this goes back to household. Now, whatever business has used these facilities, he would have made something, final consumer goods and services. Whatever consumer goods and services he gives back to household pays back money to the business. So that is why it is a circular flow of money. It keeps on going and moving. The challenge comes is, so this is a very plain vanilla discussion. In real life, it is not as simple as it could be. The challenge in real life is, what is the biggest challenge in real life? The business have taken all the services from here and business have paid them here also. But the goods and services, the business might export. They are not coming to India. Say, for example, the best fruits, Alfonso, are not in India. They directly exported to US, UK, or Middle East, the country which pay you higher. So that kind of leakage happens. Similarly, here, I have kept the money. Business has paid you back the money, but household is not buying the goods and services. So the money gets stopped. So this chain reaction happens here. So that is this is a very simple, plain vanilla. In real life, it does not happen. But this is just to explain how the money movement happens and why it is necessary to spend both the sides. If these guys will not spend here, this money will not come. So they will not be able to hire land, labor, capital. In this COVID period, out of 4, which was the most important factor of production, you think, which damaged the production a lot, which was considered the most relevant factor in COVID period? Labor became the most relevant factor in COVID period. A lot of people realized that the moment labor started moving to their hometowns, their tier town cities where they came from, it actually damaged a lot of production. So each state then was started to give some offers that whoever comes from other state, we will give them space, we'll give them comfort. Because without labor, whatever land you get, whatever capital machines you put, whatever entrepreneur you do, if there is nobody to run the factory, you cannot do that. So even if I put so much of money, if there is nobody to manually run that show, it does not make sense. So that was the most challenging factor. So theoretically, the definition of GDP, as we start with, some value of market value of final goods and services produced by factors of production within a nation's border. So in a nation's border, how much we produced. We do not include second-hand goods, or we always exclude second-hand goods, or we exclude household productions, because these are not coming into the part of government data, even though it is a genuine legal transaction, but it is not coming. So that way it will not come there. Nominal real value we discussed. Fiscal policy, as we discussed, it is the job of the government to ensure the economic activities, taxes, unemployment rate is controlled, inflation is controlled, and overall economic growth happens. That is the job of a government. And to do that, government can use any of the instruments. They can take public revenue, public expenditure, debt, deficit financing, but they need to take care of activities. There are various theories which they can take for. As we discussed, expansionary and contractionary. Expansionary, where there is a recession, the government start to avoid the unemployment problem. Government use expansionary approach to start spending. In case of recession, in case of inflation, they start taking contractionary approach, where they increase taxes or they decrease government spending, or can they do combination of both? Generally, they prefer increasing taxes generally. And monetary policy job is to support fiscal policy and to ensure that the availability of money is there so that business can grow. If availability of money is not there, currency is not stabilized, it will impact. The most important role after economic policy monetary is to ensure my dollar value of money is maintained. Otherwise, if my dollar keeps on falling, my dollar INR is weak to dollar, it will impact my export-import equilibrium, and the government needs to take care of that. So RBI take measures to control their economy, currency value. Now, there are few ways to control this. So one of the ways to control is, one is the government puts CRR and SLR requirements so that money is limited. In case of inflation, the government increases CRR, SLR. In case of recession, government reduces this limit so that money can flow. So the government has a rule that there has to be a lending to priority sector mandatory. So, for example, if somebody need to take a plane license, so if suppose Indigo wants to have a license from Delhi to Mumbai, that is a profitable sector. Airlines will say, I will give you Delhi to Mumbai only and only if you fly one flight from Delhi to Patna, where the number of passengers are less, so that you grow on one profitable route and you also start one unprofitable route. Similarly, in government, they have made mandatory that if you are giving loan to commercial loans, one certain percentage of loan mandatory you need to give to Pradhan Mantri Rozgar Yojana scheme, PMRY, and other similar schemes, where you can always serve the underprivileged community. Otherwise, who will give loans to those people who are on a lower income bracket? They will not give you higher revenues. Otherwise, every bank would like to give loan to real estate builders or jewelers who can give a loan of 14 to 15% interest rate. Whereas the poor people cannot give that much interest rate. So that's why they put a limit. Similarly, in certain loans, your interest rate cannot be higher. So, for example, low income housing group, there the government has put a limit that if you are taking fees, prime lending rate plus 2% or something like that, you cannot exceed certain sectors. Your interest can have to be within that particular bracket. Then only the people will get benefit. CRR, SLR we discussed. The higher the CRR, it will impact the liquidity, because the more CRR, the less liquidity in the market, and vice versa. Repo, reverse repo we discussed. When it is the liquidity adjustment, it is repo. Monetary policy is always by RBI governor. Head of monetary policy committee is always RBI governor. Now, business cycles, we discussed there are 4 business cycles: expansion, peak, contraction, trough. We all start with expansion whenever a new cycle starts. Then it reaches on the top. Then the demand starts getting squeezed. Contraction comes and trough. So these cycles, there is no time period how long it will be expansion or how long it will remain peak. So this curve can come anytime, but the moment the demand is getting contracted, that is a point where actual worry happens. If it is coming continuous for 2 quarters, then it is showing that GDP has in a real trouble. Then they try to put efforts to come back into the streamline. If you remember 1930s Great Depression, it happened in 1930s. In 1930s, it happened that Winston Churchill was going for a meeting, and he thought to get his shoes polished. So he went to a shoe shiner, and shoe shiner was polishing his shoes. And then the shoe shiner said, because he was wearing dress coat and all, Mr. Churchill. So he said to the shoe shiner, shoe shiner said to him that, and he does not know who is Winston Churchill. So he said that, sir, I'll give you one advice. Buy a stock of XYZ company at that time. Buy this stock, it will make huge money. He paid a tip to that shoe shiner and came back to his office, and he called finance minister and say, are our people so much educated now that even a shoe shiner was giving me a tip? Then he said, then the finance minister said, sir, if the shoe shiner is giving you a tip, that means we are entering into a big crisis. And he said, why you are saying that it is entering into a big crisis? He said, when a person who is shining the shoes, he did not know fundamentals of stock market. And if he is guiding you to buy a stock, that means everyone is doing blindly buying and selling. So something will definitely come up. And we all know the 1930s Great Depression was considered to be the longest depression. Market went into a huge tank. If you recall 2008 Indian stock market, if anybody would have burnt your fingers in Reliance Power IPO, I don't know how many of you burnt there in that time. If you recall that period, every businessman in India would have taken loan from bank, especially in Gujarat. I know they've taken loan from the banks and have invested in Reliance Power IPO from each account of their family members, thinking that stock will go give a very huge bumper returns. And we all know what was the final state. It actually went into losses. And a lot of people lost huge amount of money. So depression and this market moves up and down. Nobody can time the market. So when India had COVID and across the globe, everybody said we will go for a U-shaped recovery, that it will take long time from coming back to the depression what we're having. Our stock market was all-time low, but few economists said we will have a V-shaped recovery. We will recover very soon, faster because of our fundamental consumption skills with us, and it actually happened. Our stock market was at the lowest in March or April 2020, and in 6 months it almost got the highest return. And it had been a world record now. In April 20, we got the highest number of DMATs opened. 10 million DMATs got opened in only in April 2020, and that is the reason some stocks of CDSL and other marketplace got high, because liquidity was there. People were not doing anything. Everybody was sitting at home. So people thought it would be a time pass to at least buy one stock a day and keep watching. That will keep you busy whole day. So that is the way at times economy takes its shape. I've summarized certain formulas here at the end of the slide. So in exam, at least formula should be aware. Practically, they will not ask any questions to calculate, but at least they ask the fundamental formulas. So you need to be clear on formulas. Questions on revenue receipt, capital receipt should be aware. Questions on repo, reverse repo should be aware. So these fundamentals, if you are aware, then that most economics will be cracked. Yes. If you have any questions, feel free to ask questions or anything you like to discuss. Anything on any topics? Now we will have, after the lunch break, we will have judicial pronouncements. So Neha Bhandari will take on judicial pronouncements. And then we have our Naveen Khandelwalji will be taking on economics is 3 marks. You have 3 marks on economics. Naveen Khandelwalji taking on valuation approaches. And then I'll take on income tax. So these 3 marks again, I always say it's a low hanging fruit. If you are able to get the basic concept and get some MCQs clear, it's a very simple. But a lot of people lose these 3 marks because they get confused in certain concepts and certain terms in exam. They give wrong answers for simple questions. So if you are able to get these MCQs and do some work, it should be fine. That should not be a challenge at all. If you have any question, then we can ask now, or else we can resume after what was the lunch break time. Let me check what was the lunch break time. Two 45. Okay. So today morning you got all Indies sessions done. So there are 4 Indies which you'll generally get 5 mark questions: 109, 113, 36, and 109, 113, 103 also. So in 113 you need to be more careful in 113, because very basic question comes on 113. So they asked very simple question in 113 few days back. And what is the question? How the standards say that disclosure should happen of level 1, 2, 3. In what format the disclosure should happen? Paragraph format or tabular format, or do whatever you prefer. So if you see 113, it is a tabular format. Standard itself says that data of level 1, level 2, level 3 should be presented in table form, not in a paragraph form. Whereas if you see all other standards, they do not say how to present the disclosures. They can say however you feel. So 113 you need to take care. Most important you need to take care in 113 is on principal market and most advantageous market and price. How do you compute principal market, most advantageous market and price? There is a fundamental difference between two. In computing most advantageous market, what I do, I remove transportation cost and transaction cost in determining what is my most advantageous market. So if I have two market A and market B, and I need to decide which is most advantageous market, I will reduce transport cost and transaction cost. That is mandatory. Once I decided what is my most advantageous market, then I need to decide what is my fair value, what is my price. In that price, I will not reduce the transaction cost. So just note this difference when you prepare, look for transaction price and look for most advantageous market. In most advantageous market, we remove everything to find out. But once we removed everything and we decided what is most advantageous market, for determining fair value, we do not reduce the transaction cost. Transportation cost is always reduced, always. That you need to take care. Level 1, level 2, level 3, you need to take care. That which is directly, that is what is identical is level 1, similar level 2, and unobservable is level 3. So that way is you got 3 datas, level 1, level 2, level 3. Level 1 cannot be for similar. So say for example, I have TCS shares with me and stock exchange is also TCS shares. So that is a identical stock. So I can directly take stock exchange price and do a level 1 classification. But suppose I have Wipro shares and Wipro are unlisted shares. Wipro and TCS almost same business, same line, same export, same turnover. Still, I cannot say whatever TCS stock market price is my Wipro price. Though it is similar business, but not identical company. So I will take TCS base and do adjustment. That will come as a level 2. That is similar business. And level 3 when you have no relationship. That is like I have a Swiggy or Uber stock. Uber has no listed comparable. You go level 3. So that you need to take care of. In 109, what is financial asset? What is financial liability? That concept you need to know. Say for example, I received advance from a supplier, from a buyer to give him inventory. So what he would be in my books? Financial liability, non-financial liability. You're on mute, Jekan, so I cannot hear you.
Financial. Because there is exchange here. Financial.
What was my question again? You asked. Can you repeat my question so I know whether I asked right question or not? What was my question?
In fact, yeah, it took in advance and give back goods.
Then it should be non-financial.
Because there is a give and take. I mean there is flow.
My question is, I received advance. So you are a buyer. You want to buy inventory from me. So you have given me 100 rupees to me. That Sumit, take 100 rupees and give me inventory. So in my books, what should I recognize you? It should be non-financial liability. Why non-financial? Because our agreement is not to give you cash back. For me, I don't need to give you cash. I need to give you goods. So then it will not fall under financial liability. It will be non-financial. Similarly, if in your books, it will not be a financial asset in your book because you will show as advance to supplier, right? You cannot say it is a financial asset. Why it is not a financial asset? Because you don't expect cash back to come. Your first intention is you should get goods back. Suppose I do not give you goods, then I have to give you cash back. But that is not the main agreement. Main purpose was only to get the goods. Similarly, my debtors. If Debtors in your books will be financial assets. Why they will be financial? Because you expect them to pay you back. Last question on this. Income tax refund in my balance sheet. What it will be? I have a TDS, I would have given advance tax. Now I'm expecting refund from government. It's a income tax actual refund due. So what should be?
It's a financial assets.
It is a non-financial.
Non-financial assets.
Non-financial. I'll tell you why non-financial. Though I'm supposed to get cash. So this is one exception. And what is the exception? Irfan, do you have an agreement with Government of India that you pay me cash back? You don't have an agreement. Tax was not your choice. It was a compulsion. In all other cases, when Jaykant would have given me money for buying a goods, it is an agreement. Whether written or unwritten, it's an agreement. But in case of taxes, it is statute. There is no agreement between you and government. And what is the main line between financial instrument? A contractual arrangement or contractual agreement. So there is no agreement between you and me. So that's why TDS will not be there. Similarly, if you have gold, let's say I have gold coins with me. Is that gold coin a financial asset, non-financial asset?
Non-financial.
Non-financial.
It's a non-financial asset. Though it has a value, it can be converted into gold, but I don't have a contract with gold that you will give me money back. Somebody will give me money, but that is not a contractual, right, as of now. So it's a non-financial. So that way you need to consider that. Fine. MAT is also non-financial, absolutely. And so in 109, just take care of basic definitions of financial and non-financial and what is debt and equity classification. In 103, two things are important. How do you treat bargain purchase and how the goodwill is allocated? These two things you need to take care of. Bargain purchase, when normally bargain purchase is very rare. You could not buy less than the value. So, but in case you have a bargain purchase, you show it under capital reserves. So they ask question on bargain purchase. And in case of Ind AS 36, focus on 2-3 terms. What is value in use? How impairment happens? In case of goodwill, do we check impairment every year? So yes, in case of goodwill, we test impairment every year. In case of intangibles having undefinite life, undefined period. So suppose I have a formula which is undefined period, no time limit to it. Then I need to test it every year. Without any definite life, you test every year impairment testing. And what is the formula that which is how technical know? If you don't have life, check whether that's, take for classic example, pager. Pager, there was a device came in 1997, 96, 98, which is now not existent at all. It came for 1 year. It became, at the time, it was a craze. Everybody will show it on their belts. It's like a status symbol. Like Raven ka chashma ka cover lagate, pager lagate the. But that technology got deleted in 1 year because now we got mobile. So who is interested in just giving you a app? So you need to see whether it has a technical know-how. Even if every year that testing has to be done. So similarly, that kind of things you need to see in Ind AS 36. So if you are clear on these basic terminologies, you will easily get high concept of it. No practical question will come on Ind AS. Simply theory questions to simple theories. If you are done that should be sufficient. You don't need to be expert in Ind AS, but basic these things that should be sufficient. Basic reading should be sufficient. Even if you read PPT, that should be sufficient to get basic concepts. If you have any questions to ask, you can ask now, else we can break. So you can have your lunch. Rajkumar sir, if you have any questions, we can ask.
Yeah. I wanted to ask regarding share-based payment. Is it there? That standard 102?
No. That is not there. That is not there. ESOPs, share-based payment, that is not there in your syllabus. They will not ask questions on that. But practically, in practical life, that is one of the most premium assignments.
Yeah. Yes.
Very few people have actual working on this, but somebody who works on this, you can command a premium on this kind of areas. Because nowadays all startups give ESOPs, all startups. It is a huge opportunity. Forget startups, all big IT companies have their holdings abroad. They do a lot of shares to key employees. So that kind of a good opportunity there. And there is if you Google no analytics, KNOW analytics, there is a BPO in Ahmedabad and Noida. They do only valuations of ESOPs. They're one of the biggest tasks is to do valuations of ESOPs. So they see ESOP valuation is worldwide same. Canada, US, UK same. So they have taken contracts from outside India, from CPAs, and they do CPAs. See, because we Indians are most economical in BPO activities, most economical. So if this same valuation, somebody will charge, let's say, $100 in UK, let's say. So they will say, okay, we'll get to India at $50. So you're getting almost half of the cost. So this 102, practically one should work. Once you become valuers, this should be a good area for consulting. And it's a huge opportunity.
Yes.
So can I ask one question?
Yeah, please.
Can a registered valuer do valuation of abroad company?
In abroad company?
Yeah.
For what purpose?
For doing ODI, sorry.
As of today, no. But okay. it is in the draft rules. If you see the RBI has issued a draft rules where they say that now once the rule get approved, so maybe let's say next month if RBI approves that rule, then your answer will be yes. Abhi, as of today, the position as of today is only the CA and merchant banker can do a valuation under FDI and ODI as of today.
Okay.
But RBI in last 3-4 months back, they changed the rules. They changed the draft rules. In the draft, they mentioned that now it can be done by registered valuers. So they removed merchant banker also, and they removed CA also. Only RV can do. But okay. This get passed, so it may take time. It may take pass in next 1 month, or it may take in 6 months. Okay. But for sure, so Irfan, to give a very positive view, whenever the RBI has thought to put a name of RV in ODI, so at least उन्होंने सोचा है कि इसको लेना है, because India MC recognizes RV only. So RV will be recognized for sure. In ODI it will come. Once it comes in ODI, RBI will also include in FDI also very soon. RBI cannot keep two sets of values कि पैसा इंडिया के बाहर भेजो तो किसी से भी करा लो और आ रहा है तो सिर्फ CA या merchant banker से कराओ. Then they will keep a same level of professional. So that will come shortly. I think in next 1 month or 2 months they will finalize ODI rules. That's what we understand.
Okay.
अभी तो नहीं कर सकता, but 2 महीने बाद कर पाएगा, 1-2 महीने बाद.
Okay, thank you.
This ESOP valuation, is it altogether different thing or it's a normal thing?
The ESOP is altogether different thing, and two reasons it is different. So in ESOP, you need to use option models. Either you will take Black-Scholes model, or you will take a binomial model. So once are these models too complicated? The answer is no. It looks like complicated, but once you start working on it, you will find it is, and we can do that. But certain times the data collection is difficult. See, for example, for a listed company, I can easily get volatility from the stock exchange. That last 1 year, 2 years, 3 years, how the stock market is moving. For an unlisted company, it is very difficult to find volatility, because volatility can only find out when I have a listed data. So that kind of assumptions are challenging. But having said that, a lot of people do that, and this is a great area. And these are all Excel driven. So once you get a Black-Scholes model working, it is very easy to. Even there are a lot of websites who give free Black-Scholes calculator. So you just put the number, data, and they will compute what is the ESOP value. There are certain reports available on internet also on ESOPs, but they will not tell you in detail how to do that. But yes, you'll get a ballpark figure. So you need to do 2 things. One is the value of shares of the company. That is one. Second, the option valuation. So shares value can be done by DCF or any method which you prefer. So that is normal valuation. Option valuation will come into your model. And then you need to also make assumption. Say, for example, I issued ESOPs to 100 employees, hypothetically. Now, will all 100 employees will exercise? May or may not, because what will happen? Some people will leave. So my past history says that 30% staff leave every year to me. So I will make assumption and calculation that okay, out of 100, 30 will leave, so 70 will only exercise. So that judgmental you take it always. So that way it can be done. So once we start doing it, it is possible. That's not a challenge. Valuation exam syllabus, in my opinion, is going to change. It may change either in July, and I'll tell you why it may change. Because the ministry, the IBB has contacted me 2 months back to do some working on valuation, but they got stopped in between. They say we'll come back now in March. So in March, they will be contacting me and few other valuers who are academically connected with various RVOs. Then they will start changing, because now they change the syllabus of insolvency exam. Insolvency, they just did the change the syllabus. Valuation, they will change maybe in July or August. Again, do not take my word as a final words, but I'm just idea. It will change for sure. So indirectly, I'm giving you a message that the moment training happens, you all need to appear for exam. That is the message we need to understand. But don't worry, whenever the change will happen, it will be for good. So they will be removing illogical things. So if you see the first syllabus of valuation, we used to have Contract Act, Sales Act, very old acts. So they removed those now. Now we only have Transfer of Property Act and Stamp Act, still old act, but they have just put in. But for others, we can always change. So that will happen somewhere in July or August somewhere, because they're waiting for the new now. And now the new chairman has also joined of IBBI.
Yes.
Mr. Ravi, earlier he was not there. It was after Mr. Sahu, it was nobody was there for so many period. Now he just joined. That way, it will take time for him to approve the new syllabus. Okay. So we'll take a break and you resume by 2:45 so that we'll start. Okay. See you in the evening.
Okay, thank you.
Thank you.